Welcome to the Dividend Talk podcast, episode 247. Buffett's last dance and a couple of earnings. Dividend Talk is your number one podcast for all things dividend and stock market related with a unique European flavour. My name is Derek from Engineer My Freedom and I'm joined with my co-host European DGI. If you want to learn more about us, please visit europeandgi.com where we have articles on dividend growth investing, including 30 European dividend aristocrats. While you're there, you might as well grab our free dividend portfolio tracker template. We also offer a premium dividend growth service featuring a bi-weekly newsletter which includes stock deep dives, dividend stock cards and access to our dashboard with over 130 dividend growth stocks. All of this is based on our very own dividend safety analysis. But enough about that. Please grab a cup of coffee and let's get started.
The time has arrived where Greg should become the chief executive officer of the company at year end, and I want to spring that on the directors effectively and then give that as my recommendation. Let them have the time to think about what questions or what structures or anything they want, and then there's the meeting following that.
How do you feel about this, Derek?
So a little bit unexpected, I would say. Big news coming out this week. Buffett, the legendary Warren Buffett, is standing down. But do you know what? The more you think about it, the more I think it makes sense. I think it completely makes sense. I was shocked initially, but I mean, he'll still be there to obviously mentor, give guidance, or something for a period of time. So yeah, emotional, but I mean, I think it's the right move for him.
It's the end of an era. That's what it is. Charlie Munger died at his 99th year, almost 100th birthday.
Yeah,
he's now 94, I believe, and he's calling it a day as well. Yeah, it's such a pity. I mean, what a legend, right? What a legend. He inspired so many people, and we all know that deep inside he's a dividend investor, because while he doesn't like to pay a dividend, because he thinks he can make a better return and he can better doing capital allocation, he loves it when his companies pay him dividends and the hard cash flow.
Yeah, no, you said he thinks he can. He has.
Yeah, he has. Yeah.
But as you said, an end of an era. But I think I prefer it this way, that he's stepping down like this, rather than, I know Charlie didn't get that choice, obviously. So I think it's nice that he has the choice now, that he can step down and we can all just sit back and
what was interesting, I was watching this, right, and he mentioned that in the board of directors, only his two family members that are in there were aware of what he was going to say. So Greg Abel was sitting beside him, no heads up, nothing, nobody knew, nobody.
Would you imagine that? Imagine that raw reaction to just going, what?
Yeah, exactly. What the hell? Is this it? Yeah. Greg Abel has been, I don't know, how long is he there? I mean, talking about having patience in your investment journey, because for him, it's also an investment.
Exactly. But who better to learn from? I mean,
this is amazing. And I think the company will be just generally in good hands there. I mean, if you see, this whole succession plan has been built over the last 20, 30 years. Yeah. So at a certain moment, this should work out. But hey, in the spirit of Michael Jordan's last dance, what do you think that this old fox will still pull off this year?
Honestly, I don't think he's going to pull off much. I think he's just going to sit back and relax at this point. I think he's just going to hand over the reins and just let because I think he's too humble. He won't want too much about him. He wants to hand over range. You heard what he said. He just wants to hand over and let them hit the ground running. So I don't think there'll be any surprises or he'll pull off anything spectacular. What do you think?
I mean, it all depends on whether something weird happens still in the economy and in the stock markets. Then he will still pull something off. But now you're talking about handover, right? And knowledge transfer is probably done that, but he's probably saying like, and here you have the Coca-Cola 1978 annual report. Please, keep an eye on note number 7 of the income statement, because I've always wondered if this will ever effectuate, something like that.
Yeah. Would you say he's handing over with conditions?
Exactly.
A list of conditions that he.
Yeah.
That
Like
he
never sell Coca-Cola.
Yeah. If you sell Coca-Cola, you're gone. You're out.
Exactly. I will vote you out. Yeah, there are probably some things, and Seas Candies. He will also talk about like don't play with the flavors. Never make it child friendly or healthy or something like that. It's been doing this for many years. Keep it like that.
Yeah. No, but look, I don't think he'll do anything spectacular. It's just about handing over. But apart from that, what is your biggest learning from him?
Yeah, I had to think deep about that because there's so many learnings. I have his biography, right, where it's I think 900,000 pages. I read it all, and there he writes about how he was, having day jobs as a kid, bringing the post there. But my biggest learning in the end, and it's not really his invention, but he often mentions it, but it comes from Benjamin Graham, is in the short run, the market is a voting machine, but in the long run, it's a weighing machine. We have seen that most recently again.
Of course.
Quick, I guess, dip in the end. That's one of the most, because this quote sticks so much with me because it makes me calm when I'm investing sometimes in undervalued stocks, or it's never clear that they are undervalued. Think about Google today.
Yeah.
Google has really two sides on social media. The other say it's like cheaper than a bag of potatoes. Yeah. And then you have the other one saying like, well, search is dead. Yeah. Forget about it. So is it undervalued or not?
Exactly. Yeah. Who knows?
Metrics is undervalued if you take the historical metrics and historical growth numbers. But can you extrapolate this into the future? Yes or no? So that what makes investing so difficult. And this quote hits so much because it shows that in the short run, the market is really a voting machine. But if you buy a good business, it will surface up. So the question is the good business? And that's where we always say you can't borrow conviction. But this one really, it makes me calm when people are dumping in the stock market everything. It makes me calm. I know that this company at a certain moment will surface up.
Yeah. And when you speak about that and you're speaking about good businesses, it always comes back to me about competitive advantages. And it's something that it's like a phrase that he coined. Do they have a competitive advantage?
Yeah, it's mention of a moat.
Yeah, exactly. And that's, I mean, whenever I hear that phrase, I always think back to Warren Buffett reading all these articles.
But it's also hard, right? Because it's easy to quote it, but it's so difficult because a moat. Let's talk about Google search, monopoly nearly.
Yeah.
Then LLM has a breakthrough, entirely new technology. This whole moat around the castle became obsolete because now you can just shoot a cannon. Yeah. So also with this, I want to say like moats don't last forever. Yeah. And you can put a lot of barriers in place. But if your company is very reliant on technology, then it's also very sensitive to technological disruption. You just usually don't have the technology yet, so this innovation what kills you then. Well, if you're an Albert Heijn, as an example, yes, technology helps you to make your business more efficient. Technology helps you to bring goods quicker or more convenient to your consumers, right, to your customers. But in the end, it's about supplying food to the people. Yeah, and that's not something that can easily be technology disrupted because we all need to eat.
Yeah.
So that's what I'm trying to say. Like, moat is something different. But for instance, an Ahold can lose competition again because for whatever reason, yeah, maybe there's economies of scale of a competitor that just wipes them out, whatever. Yeah, it's a bit unlikely in the case I give, but I only want to say, like, yes, there are many businesses with remote, and in Morningstar they talk about narrow mode, wide mode, but even the wide modes are a moment in time until something new comes.
Yeah. It's only an advantage until it's not.
Yes.
And that's exactly what it is. The world keeps evolving, so it's all about really how a company can evolve, not even to keep that particular amount, but can they bring something else, add more value? What can they do to improve? That's
Yes. And for Berkshire Hathaway, the moat has actually been management.
of course, yeah.
Yeah, and I would say this is probably with many companies that management has a really important, but then it's not just the CEO. When I say management, like the whole succession planning, the stability, all of this.
Yeah, generating returns for shareholders. That's their competitive advantage.
Exactly.
But from my end, I think what I learned the most is around simplicity and patience. I think if you speak about Warren Buffett, I know he advocates low-cost index funds for the majority of the population, which sometimes we agree with because it's quite easy to access and you don't have to think about it much. But I mean, it's reported that 99% of his total net worth was accumulated after the age of 50 and so on. And then that number goes up 60, I think 80% or something. So he just demonstrates what patience, buying good businesses can do, and then his returns and his net worth kind of skyrocketed. So
I saw someone mentioning today is like the wealth that he accumulated. He did it over 83 years because he started when he was 11 years old. Yeah, and he's now 94. So hey, I'm now investing for 12 years.
Yeah, have a bit to catch up.
Yeah, I still have like 70 something years to get to the same spot, but he's already ahead of me because he probably had better returns when he was 12 years old than I when I'm in my 40s.
No, yeah. Hey, he has to learn. He had to start somewhere.
Yeah.
But yeah, look, I think for me, simplicity, patience, and you're right. The market is a voting machine, not a weighing machine. So some very important.
No, the way around.
It's
in the short term, it's a voting machine. In the long term, it's a weighing machine.
Yes. You know I'm jet lagged. bear with me on this one. Yeah. But yeah.
Good. The guy's a legend. He deserves all the credits. And yeah, let's move on. Surely we'll speak still about him when he released the last time on television there.
Of course we will. Let's move on to dividend hikes and maybe some dividend cuts, will we? So
yeah, let me take a few maybe. Yeah, because last week we had a guest on the show, so we didn't really go through the dividend hikes. But Apple did a 4% dividend hike. That's a bummer, right? That is like 4%.
Yeah.
I mean, I wish they did a little bit less buybacks at a 30-40 multiple and just increase the dividend by 10%.
Yeah.
For me, this is a bit of an off. Yeah, it's a bit offending. Let's call it like that. It smells like financial engineering. Yeah, because the revenues have been flat for 4 years. So probably, I mean, let's say differently, not probably, but the buybacks are contributing highly to the earnings growth. Yeah.
Of course. Yeah.
So it's a bit of financial engineering there. I hope they don't end up doing GE or IBM if they continue like this. Then RTX, one of the for the fanboys of G.I. Joe, they hiked the dividend by 7.9%. American Water Works hiked the dividend by 8.2%, ticker symbol AWK. PepsiCo, I think they announced it already earlier this year, but they declared a 5% increase, which is interesting. We just spoke about Google, but PepsiCo is also a much debated stock. We have mentioned already that we are not so bullish on them, rather on the other side of the spectrum.
Yep.
Then an unknown company to me. KLA, ticker symbol KLAC, hiked their dividends by 11.8%. 16 years of consecutive annual dividend increases. I just wanted to highlight it because when it's double digit, I think it's worth mentioning on this show. Maybe someone checks it out and says like, hey, this is actually quite interesting. And then Expeditors Internationals of Washington, EXPD, hiked their dividend by 5.5% as well. 29 years of dividend growth. So, it's a little bit American season for hikes, right? The Europeans had their stuff, but by the way, I got some dividends in already in May. You too?
I haven't checked. I haven't actually checked.
Oh, okay. Let me quickly tell you which I got already, because it's now the 8th, or what is it? 9 May?
9th, yeah.
Yeah. So let me quickly look. I was updating my sheet a little bit this afternoon. So I got Munich RE. And I bought that one at 160 euros at the time. It's now 500 or 600, and the dividend growth has been amazing. Another big payer for me, Danone. They paid the dividends, so that was also really like catching.
Yeah.
LVMH. No, LVMH did it a bit earlier. Okay. L'Oreal paid the dividend yesterday to me.
Yeah.
ASML paid the dividend. Yeah, they paid dividends to me this week. Yeah, so it's starting. It's starting. Also, Bristol Myers, I got the dividends already. So I really love this month, and next month is even better, right? For you as well, I believe. But for me, May and June are really the top months. So I already received like a third of the dividends for this month. I'm liking it.
Yeah, May is a big month. I think I'm just checking my calendar. British American Tobacco will pay me. They are quite a big position for me. Obviously, Shell this month.
Oh yeah.
You have Shell. You've got NN Group, ASR as well, which
ExxonMobil as well, something like that.
Yeah.
Nice. ASR.
Actually, looking at this calendar makes me smile. Makes me smile.
Yeah. So. Good. Yeah, so some dividend hikes and some juicy dividends coming in, and time to reinvest those buggers, right?
Yeah. But speaking of which, we did have one dividend cut this week.
Yes.
Wendy's, ticker symbol WEN. They had a 44% dividend cut to 14 cents per quarter.
Yeah, it came a bit as a surprise, I think. I haven't studied the company really, but you would, on the first look of it, Wendy's, you think McDonald's, solid businesses. But yeah, next time when I'm in America, I will check it out. Maybe they just lost their mojo.
Yeah. We did get one question, which I think would be interesting for the news of the week. I know we kind of started with Buffett, and it's around. So it's from Stefan, and he said, "What are your thoughts on the possibility of an acquisition of BP by Shell? So how would it affect Shell's buyback and dividend outlook?"
I think the company Shell even mentioned, I think CEO even mentioned, like at this moment in time, we prioritize buybacks, showing that there's more value in just buying back your own stock than even considering Shell, considering BP.
Yeah. That's how you flex. That's a real flex, right?
That's a real flex. Yeah, exactly. Yeah, and Chevron and Exxon were today also news that they're also in the game for BP. Like, look, if you look at the 5 oil majors and you bring also Total Energies in here, it's clear that BP has been the most struggling one. They had Deep Horizon, this big oil spill. They also cut the dividend in 2020. The oil crash. They have been just struggling, and for me, this is just a sign of poor execution, because they're in the same business. The business is pretty much defined, so it comes down to execution. It comes down to the cost of your projects, project management, and that comes down to how you create a culture, how you do cost control, but also what they did with Deep Horizon, they're not too much a Scrooge, so that it hurts the safety profile of your assets, right? So BP is just poorly managed, I wouldn't say, but they're just not the best managed. And then they had the whole stake with Russia that they had to give up, which was really, really taking a lot of their oil reserves out. So that also meant they had really an overexposure to that. And yeah, I did a deep dive on BP, right? So our premium subscribers can read it. That's why it also all the time looks to be one of the from the 5 kind of the most attractive oil majors, but it comes for a reason. Yeah, you can't give a proper premium to this company because there's always something with it.
Yeah.
Now and then whether Shell should buy it, you know what? I do think at the right price that it makes sense to acquire the assets because there's just synergy. Yeah, there's just synergy because you only need one time to manage it. You only need one IT department. But not now yet. It needs to be really this feeling again as 2016 and 2020 that the whole world is in panic. That's when you pound the table. Also, what I don't like yet from Shell is that they keep it at the gearing ratio at 19% at the moment. Why don't they bring it to 5%? I mean, they say without leases, it is much less, but just clean up your entire balance sheet. Just clean it up, and then you can pay. Because what happens, such a company as BP will cost you many billions.
Yeah.
So you will need to leverage up again. You will need to go in debt. Why don't you give yourself the space now, pay down aggressive more debt, do a little bit less buyback so that you can acquire companies and not straight away again? Because what would happen now if they buy BP, it may even come with a share issue like the British Gas. Yeah, then suddenly the 20 or 30% of shares that they bought back, they will need to be reissued again, today at a lower price than what they have been buying back over the last year. So that would not be nice for shareholders. And yeah, secondly, it will come with a lot of cash that they need to borrow at not such an attractive interest rates at this moment in time.
Yeah. You're probably talking, what, 60 billion for a company like BP?
I don't know what the market cap is at the moment. I would need to look it up.
But you would imagine, say, back of the napkin, you'd probably say between 50 and 60 billion. So it would add a significant amount to their debt profile, which would obviously limit their buyback program. And as you said, they've already said that that's their priority. So I don't see it happening.
So their market cap at the moment, from what I understand, is $78 billion BP. So if you want to acquire them, they probably have to pay 90 billion.
Yeah, premium. Oh, okay.
Yeah. So I would rather wait until this company, I don't know, trades for 50 billion or something like that during a crisis. Shave 30% off of this and then offer 65, something like that.
Yeah.
60, 65.
Yeah,
so I would more think like that as a CEO probably, and then 65 you can put a bit of the balance sheet. But that's why I would like them to just prepare for it. Because if you look at ExxonMobil or something like someone like that, they can just like acquire it. Yeah,
they could do it, Jan. It might make more sense for them to do it, a cleaner balance sheet. So why not?
But there you have maybe less cultural fit. Yes, so which is often underestimated in acquisitions and mergers.
Yeah. Nice. I think that answers the question quite well. So we might move on to some earnings. And I know you have Novo Nordisk. And
I think we have to talk about Novo Nordisk because many people have been buying Novo Nordisk lately. So I'm sure they will be interested in their earnings. I assume many people have also looked at it themselves. So I don't know if what I'm going to say is to add a lot of value, but I leave that to the listeners. Generally speaking, what I would say is like the company is just growing, right? So the operating profit increased again by 22%. That's kind of the headline. But what I find most interesting here, there are two things that I want to call out. Firstly, they are finally submitting their oral their pill again, for let's say for Wegovy, and people were wondering like, why are they not doing that? Why didn't they do it earlier? Because what the narrative in the market was when Eli Lilly reported that they are going to put a pill in the market, it's like, Novo Nordisk can't do it, they're too late. But what people sometimes forget is that companies have the solutions already on the shelf. But if there's not really competition at that moment in time, you wait because you want to you want to kind of create, let's say, a release ladder and a patent ladder to maximize profits. Yeah, so that's usually how companies operate in the pharma space. It's a bit dirty, right? When you think about it, because usually you want to have patients straight away, have every solution. On the other end, it's also, of course, a prioritization in the company. What do you do first? Because you can only spend your money once and your time once, right?
Yeah.
So it was just lying on the shelf. So that's why they can straight away now submit, and they may be even earlier than Eli Lilly. And I also understood that this one could have less side effects than the one for Eli Lilly. So generally, I'm keeping an eye on that one, because that, I think, was what was driving the narrative also a lot for Novo Nordisk, why they were being punished compared to Eli Lilly. And secondly to that, although the CagriSema readout earlier in the year let the stock drop 10% or something like that, but they're still on it, right? 15.7% weight loss. It's not too bad, yeah. So I think it is sometimes really hard to compare apples with apples here. So I think they're still quite strong in the pipeline, and it will be important, of course, to see all those approvals coming in, the readouts over the year, and that's where I would say people need to focus more and maybe spend a little bit of time understanding what the difference is between Eli Lilly offers and Novo Nordisk, because that will drive the narrative mostly, I think. And then the second thing that I wanted to mention, like, they reduced the outlook. And, people get scared, like, oh, they're going to be less profitable. But it's not because of Eli Lilly. What they are doing is, there was this, Novo Nordisk, as per my understanding, had this capacity issue to produce. The demand was too strong, which the American government then allows competitors to come in and to also release a certain compound like that to make it available. Novo Nordisk has its product, manufacturing capacity up and running now. So all those kind of competitors that were having a similar compound, their their ability to sell it is expiring or has already expired, but doesn't mean that they always stop. Yeah. So, and then you may have also some of the fakes coming from Asia.
Yeah.
And that's what they're really fighting. Yeah. And that's impacting their earnings. But this will impact Eli Lilly's earnings as well. Yeah. So this is just like a competition, and kind of unfair competition. It was fair because, there was demand, which benefits the overall health of society, and Novo Nordisk was not able to supply. But that's solved now. So I think in the second part of the year, this should become less, as long as also the authorities support Novo Nordisk in this.
Yeah.
If not, it would be a bit weird as well when you think about the whole model of having patents and everything.
Yeah, makes sense.
So yeah, then another interesting one that I just want to highlight, right? Because we're the people that always promote you need to read the numbers as well and not just stick to the highlights or whatever management says. What I found interesting here, and that's always what I pay attention to, I like earnings to grow faster than revenues. Yeah, because that means like if earnings grow faster than revenues, that means like there's a fixed cost and there's variable costs, and it's directly margin expanding. Yeah. So then when I go to it, I see the sales has grown year over year by 19%. But the research and development costs have grown by 20%. Nevertheless, if you take all the costs like admin costs and everything into consideration, operating profit was 22%, more than 90%. But then you see the income taxes, and they are 23% more than it used to be. So the effective tax rate became 21.6% versus 20.4%, which then leads to an earnings per share growth of 15%, which is again lower than the 19% in sales growth. So here's just a higher tax rate that people need to be aware of. And I would need to check what the average tax rate is over time to understand like is this really it, or I said, have they, is the earnings a little bit more impacted? Now then you can wonder, of course, okay, what does this 500 million mean? In the end, not so much. It was still a lot of growth, but these are the kind of details I always pay a little bit attention to. So I'm just sharing it for the earnings nerds among us.
Yeah, yeah. But
But
you're talking about
solid quarter.
Yeah.
I can't say anything else. I understand the narrative in the market, but I think total addressable market, we say it every time, there's an unlimited supply of fat people, and there's also an unlimited supply of people getting fat, with the whole food consumption that there is in America and the lifestyle, and also in other places in the world. So I think there's a lot of room for growth, and Novo Nordisk is just very well positioned. I could imagine with Eli Lilly a bit of a price war, but also Novo Nordisk, I think they are doing this deal with him and hers, and the subscriptions and everything. So they are already trying to integrate themselves into the healthcare reimbursement contracts. So, which is smart, I think.
So you spoke a little bit about food and fat people. So I think I'll talk about ADM, Archer Daniels Midlands. And you remember, was it last year or the year before, they had this little account in, I'd say, scandal or so on. So the share price has been struggling since. The share price has been almost cut in half. It was near $100 at one point. It's now trading at 48, which gives it a yield of 4.28%, which is quite substantial when you think of their dividend history. So I know a lot of people can look at that and get carried away. You're looking at a dividend aristocrat or someone who has over maybe 4 or 5 decades of increase in dividends with a 4.3% yield. It can be easy to get carried away. But they are struggling this year, and it's not all down to them. But if you look at their earnings per share, it's down 52% year over year. Net earnings only came in at 295 million, and their operating profit is down 38 billion. Their cash from operations is negative. That means their free cash flow is negative, but there's a lot of working capital going on there. If you look at their biggest segment, which is their AG services and oil seals, this took a hit of 52% on its profits. And then you look at operating profit in all segments, it's down double digits. I mean, crushing is down 85%, AG services 31%, Wilmar down 52%. So you can see that they're being hit pretty damn hard. When I was reading through the report, I got a sense that ADM were blaming oversupply from industry overcapacity, say. So they're pretty much saturated in these markets, cheaper exports from Argentina, higher manufacturing costs, and then lower demand across most of its product range. So you can see there's a lot of uncertainty around trade, biofuel, it's oil seeds. There's a lot of uncertainty. There's a lot of macroeconomics, which we don't talk about, but they seem to be getting hit quite hard here. The CEO, which I thought was interesting, obviously said that, look, it's a tough environment. It's making progress on its self-help strategy, so basically cutting costs. And we know when companies have to result in doing this, they're struggling a little bit. He did also said that they expect to come in at the lower end of their guidance from 3 months ago. So this might go a little bit lower considering that. So overall, I think they are struggling quite a bit this year. There's a lot of macroeconomics going on, low volumes, low demand. It's weakening their margins. So it doesn't paint a pretty picture for him. So I wouldn't be rushing to buy these. I know like Sven Carling loves this company. There's a couple of others on Twitter that might disagree with me. But yeah, at the moment they are struggling. The environment is a little bit tough. 4.2% yield is decent, but at the moment I don't see that turnaround or even bottoming out at the moment. So I think this is one just to keep an eye on and not to rush straight into. But I just found it interesting to look at considering where a yield is.
Yeah. Do you feel you would ever own this one? When would you buy it?
I don't know. I don't see the. No, I don't. For me, there's better options out there.
Yeah.
That's the way I feel. I mean, I think if you look at this, you're looking at it from a point of view as a dividend investor, that they are. I think they're dividend king, I believe, over 50 years. So you're looking at that dividend history with the yield. It's easy to get enticed into. But where's this future growth going to be coming from? Yeah, macro, like there's a lot of issues around policies that we can't control and all these changes happening in their sector. So yeah, I think just better options for me.
But how is this different from other food producers?
Well, it depends on what you're producing. For example, like I know Cisco are in a similar area like this. I mean, they're in this vegetable oil, biofuels.
Yeah.
I mean, it's food, but it's also not all just food. So it's probably more heavily regulated than others.
Yeah.
But I'd have to do a straight comparison between them to see where are they selling. I mean, cheaper meal exports from Argentina really stuck out for me. Why is that impacting ADM compared to, say, somebody else?
Okay, good. Well, then let's go to one of the food resellers. Yeah, resellers. So, I mean, people that listen to this podcast, they know that I'm a big investor in Koninklijke Ahold Delhaize. I will not let you suffer saying this. But I must say that this was probably one of their best earnings reports in years.
Wow, it's a big claim.
That's a big claim, but I think this is one of those reports where I think that it earned its share price.
Okay.
I always felt like the share price was a bit too good. There was also all the time something. Remember that they brought this Belgium tax windfall because of, I don't know exactly what it was, into the numbers, and they claimed it as a success.
Yeah,
that was really looking bad for the CEO. I think it was like 1.5 years, 2 years ago. Now, effectively, what you need to know about Ahold: sales grew by 5%, margin down is 3.8% to 3.8%. They tried to have a margin above 4%, but I will come back to that soon. This is what people also need to know. This is not Visa with an 80% margin. This is supermarket chains. And Ahold typically sits around 4% margin. It's really hard for them to go higher. It's the same with Axfood. Axfood from Sweden, I think they have a target also 4.5, 4.8%. It's really hard to go above that. Margins are really, really slim. So that also means like one stupid mistakes can blow up the whole profitability of the company in a single quarter. It's the line of business. Yeah, it's what you need to feel comfortable with. There are many investors that stay away from such companies because of that risk. EPS is up by 4.6%. Now, what I want to say is, if you just look already and you go through the investor relations pages, right? Last year in Q1 2024, the earnings were, or the sales growth was kind of flat. Yeah, a little bit more in one region versus the other region. Now in America, it's 3.1% up, and Europe 3.7% up. So Europe is a little bit in the trend as how it's been all the time, but in America, really up. Now, why is the sales up? 2 reasons. They have been really starting to use their online channels, also with digital loyalty programs and everything. They went hard on that. Yeah, Ahold Delhaize online sales increased by nearly 14% compared to the year before. So people are buying more or ordering more. One of those. Yeah, but then also Bol.com is still good. And remember, Bol.com is this asset that they want to spin off 2 years ago, which in the end they didn't do because the whole stock market started tanking.
Yeah,
they still have it. Yeah. But what have they been doing then? They started kind of a price war, let's call it like that, to gain market share. That's what they've been doing, and Albert Heijn does it from year to year. But they are now doing it in the US, and how they are doing it? By pushing those home brands very strongly, as very strongly priced. And the margins are actually still relatively good on that, right? Because if you take a home brand, you get them almost at manufacturing cost, and you don't need to give the profits that Coca-Cola is taking there. Yeah, those margins. So you keep them kind of in the pockets here, and which allows them to also to compete on price. And if you have the Albert Heijn Ahold over the years typically has done that when the economy turns a little bit like this, that you have price conscious consumers. it becomes, for those kinds of companies, typically a deep pockets exercise. Yeah, that's usually when the price wars comes, and they are doing it in the US, and they have been very successful with that in Q1. So really, really kudos to them. I mean, they've been lowering, for instance, prices in giant food, as an example, Stop and Shop. So they've been really, really doing well with that. Now, there's one catch here. I would like to say still in the numbers is the free cash flow, because the free cash flow was down from 376 million to 199 million now, and we know that they pay the dividends and the share buybacks out of the cash flow. But they had to divest 2 meat facilities in the US, and that came with this severe cash impact of nearly 200 million. And that explains the difference. So otherwise, you could even argue that the free cash flow was flat or slightly growing. So under such a price war that they kind of are fighting at the moment to win market share, I think that's why I'm saying one of the best quarters, and I think I've seen in the last 2-3 years.
Yeah, the price war is interesting, and I'd like to compare them against Tesco, because I find Tesco do something like that quite well. And I only know this from a shopping experience, not from looking at the numbers. But Tesco always seem to do that when we're in this kind of environment, that they'll push their own brands and seems to do well. So I'd like to compare them against Ahold just to see how they fare out. But yeah, good numbers, good strong numbers from Ahold again. I'm a happy investor. I just checked their share price as well. It's €36. Wow.
Yeah, imagine that. And I mean, I don't know, but I'm not buying anymore at these prices, right?
No,
it's not needed for me. But I'm having a very healthy profit on this one. It's my 3rd largest position at the moment. So, and I have an average price of €19.46.
Yeah,
less than €20, my average price for them. So
nice. My average price is around 23, just under 24.
Yeah,
euro. Still a nice gain, I would say.
I think so. Yeah, if you look at it from that point of view, and most importantly, it is just growing the dividends very consistently, right? So it pays in total nearly 4% of all the dividends that I'm receiving each year. So, and that's what I like even the best. And it continues to grow at around 7% per year. So let it come, baby.
What do you think they'll do with Ball.com? Do you think they'll keep it now?
No, they will spin it off one time. I also feel that Ball.com has a really strong customer base, but I wonder how much growth there really is in there. And I think if there comes some exuberance again, that is the time to just spin it off. Keep a stake in it, that you're still a majority shareholder. But I think the sum of the parts in this business is valued as less than I think the individual parts.
Yeah. I agree. Nice. Well, look, we couldn't do an earnings season without doing Ahold. So
exactly.
I'm glad you brought it up, because I had literally no time to look at that this week. So I'm glad you spoke about it. So quite quickly, we'll round this up with a company called Legrand, French. You can do your French accent again. That went down quite well with our listeners, I think, a couple of weeks ago. But it's a company I don't think we speak about enough. A French company. I spoke to you off air on them as I was looking through some of the numbers. It's definitely worth doing a deeper dive on. But look, just a little background on them. They were founded in 1865. Originally, they were producing porcelain tableware. So maybe it would have been a company you would have been interested back then, like Tupperware or something like that. But
F off. You want to get a slap in the face? Oh, guys, you should see Derek's face. He has a lot of joy saying this.
Did you want to wear? I was going to say that. I could see.
No. You have your fun. Your fun.
Yes. But they shifted. They shifted quite quickly to electrical wiring accessories, which is quite a change, I would say. And it's pretty much where I would have known this company. So I was an electrician before I went back to do engineering. And if during the boom times in Ireland, if you customer was flush with money and they were giving you like loads of cash to buy the best, you would buy two products. You would buy MK Electric, which Honeywell own, and you would buy Legrand. They're the two you would buy for top quality. If they're a little bit more cash strapped, then you would buy like the Aldi or little versions of sockets. But Legrand are always up there known for their quality. So they are pretty much a specialist in electrical and, more importantly, probably digital building infrastructures and all the components that comes with that. I think that's where our main growth drivers are coming, particularly in data centers. We know how important data centers are now with all the data that we have. So that's really where they are targeting. Look at that dividend history, though. I was having a quick look on their website. It has it back as far as 2006. I don't know if it goes back before that. I just took a snip of their dividend chart that they had, but you can see the growth. It's been quite nice in that time. It was around 50 cents in 2006. It's up at 220 at the moment. So quite an interesting chart, quite an interesting company, I would say. So one that I will definitely do a deep dive on. What also I like is that their results are quite good and quite strong, I would say. Everything seems to be growing. Sales is growing double digits. Margins are up. Free cash flow is growing. They are doing acquisitions. So they took over two companies, one from the Netherlands, one in Australia. So they're growing through acquisitions as well as sales growth. So it looks like even in this volatile kind of market that we're in, they are seeing some really strong growth. So definitely worth keeping an eye on. One thing that did catch my eye on the presentation, though, is they did speak about tariffs. And they have one slide on this to focus on tariffs. And it's important for them because over 50% of their goods are sold in the US. So are either imported or sold to the US. So it's a really big chunk of their money. But look, they have some mitigating actions there. They plan on targeting sale price increases. They have savings plans, supply chain adjustments. But for me, it's nice to say that they have a plan if something is impacted by it, but we don't know what those impacts will be. But yeah, I think overall, it looks like they had a really strong quarter. Everything up double digits. They are in plan for this strategic plan that they are set in place in terms of their data centers and acquisitions. So yeah, one I think has caught my eye. You keep poking me to look at these a little deeper, so I think it warrants that. But yeah, like it's nice to see a European company like this doing so well.
It's a bit like Schneider Electric, right?
Yeah, and French companies in this area, I mean, are really good. I mean, Schneider brought up Schneider Electric. They are phenomenal growth. What I'm going mad with Schneider is I didn't buy more of them.
Yeah.
Way back. I left it too long, and yeah, Legrand are. Yeah, their share price has been flat for 5 years, which I'm not sure why. But certainly their numbers based on this quarter, I haven't done a deeper analysis, look quite strong. So
yeah, well, you know, the main thing that you got me thinking is like, how does this work? So it's 1865. You're producing porcelain.
Yeah.
And then suddenly you start shifting to electrical wiring. How does this work? How does this work? You're selling like porcelain in your shop, and then suddenly you think like, oh, I found a cable. Let's sell. Oh, they want to buy a cable. Let's, you know what? Let's forget about the porcelain. Let's sell cables. How does this work? Or is the wife was the wife of Legrand selling porcelain, and the husband was bored and thought like, you sell porcelain, I'll sell electrical cables.
And let's see who wins.
Yeah, and let's see who wins. Yeah,
let's see who wins. Yeah, I mean, look, I'm sure there was probably a couple of acquisitions or something along the way to bring it to that point, but it's quite a pivot. I mean, porcelain tableware to electrical wire and accessories is. I mean, if you saw a company now doing a shift like that, you're like, nah, not investing in them. I'm staying away.
But some companies have done it, like Philips. They were originally known for the TVs not too long ago, and the light bulbs. The light bulbs are spun off, and now it's a medtech company.
Yeah. There's another one on my mind. It was a camera company, not Canon. And they went to a healthcare. Remember the share price rocketed there a little while ago.
General Electric did something like that, but they're now GE Healthcare. So General Electric, but it's not as how Philips did it. But there are a few companies, and IBM, of course, is known for this as well, for the pivoting over time. Yeah, it happens from time to time, but from porcelain to electrical wires, that is kind of, that is like really like a big shift. Yeah.
Yeah. I just quickly checked Wikipedia, and it happened in 1904, when the company was taken over by Frederick Legrand, who gave it its name. The
Yeah.
company entered into a partnership with an artisan from Ligamos, Jean Mondo, who started a small factory making electric switches using porcelain. So that's how they got into it.
Okay. So it's actually and that's true, because sometimes in the street you still see those
Yeah.
porcelain things on the.
Yeah.
Okay.
So it's not a big a pivot as I first thought.
Exactly. Now it makes sense. We were probably thinking about the tableware only.
Yeah.
Yeah.
So
Nice.
I love this though. That's what I love about
Investing, you learn something every time.
But I find it much more with European companies. I don't know if you feel the same. When we look at the history, we go over the
Yeah.
background. European companies always seem a little bit more interesting. They always have like loads of backgrounds, different kind of acquisitions, pivots.
Yeah.
Carlsberg was one for me that I
Yeah.
did a deep dive on, and they had a really, I would say, interesting history. So
You mean the beer? The one beer, yeah.
The story with the father and the son, and
Yeah.
they had two companies because the son didn't agree with the father, and they had two different types of Carlsbergs, and then it's amazing.
I just had it with Bunzel. It was the same. Yeah. So Bunzel also started out in Austria or something like that, doing something totally different, and now they are selling forks, knives, but all those paper cups and everything, or all these non-consumables, non-food consumables they're selling. And then you wonder, like, how do you get there as well? But then, also the company kind of was naturalized under the Nazi regime, and the people were escaping to London. Then they started their own business, and then they acquired that business later, 30 years later, back again. Then the family IPO'd, family is out. So you see this a lot in European businesses. It's really, really interesting. Sometimes I think many of these businesses, you could make a documentary and a very interesting movie about it.
Yeah, I think so. I did one on BAE, and I mean, that's incredible. That whole sector is incredible. I put a chart. I think even the chart was a bit blurry. But over hundreds of years, you can see how these companies were chopped up and moved, and how they. So
and then you have also even the cultural heritage. For instance, if you see the classic "Some Like It's Hot," do you know this movie?
Yeah.
It's with the Shell director in the boat in the end.
Yeah,
that is in love with this she-male.
Yeah.
Yeah, there's a lot of that. Yeah, it's nice, right? Investing, it's really nice.
Yeah, nice. We move on to our
let's get back to
questions. Yes. We'll start with a nice question from Tim, and he's asked us. I'm only reading this for the first time. So, if Man United, Liverpool, and Real Madrid were dividend companies, who would they be and why?
Well, Manchester United at this moment in time would be Tupperware before the dividend cuts.
I would have said AT&T. I mean, they were great. They hit dividend aristocrat status or dividend king status, and then it all went to pot.
Or 3M, the same,
or 3M,
yeah. Then you may take Liverpool. You're biased there, probably.
No, I'm going to say Liverpool. I would just pick Microsoft. I'm just thinking of like AAA rated balance sheet. I'm thinking like just the cream of the crop. I'm going to pick Microsoft.
Yeah, no, but for me, Real Madrid would be Microsoft. For me, Liverpool doesn't win every year, but it's a steady one. So I would rather call Liverpool like, I don't know, the Procter & Gamble or something like this.
I was thinking about Real Madrid, somebody that buys a lot, acquires a lot of companies.
Microsoft,
because all they do is take players and bid.
Yeah, but those players are always almost good acquisitions.
Yeah, and free of charge.
Yeah. So Microsoft, they bought LinkedIn for 16 billion, OpenAI for 10 billion. This partnership. So I would say Microsoft, right? or L'Oreal or something like that. They buy those small ones, but then they scale them up and give them all the presents. Yeah.
Yeah. L'Oreal or LVMH, a bit of luxury
Yeah.
about them, a bit of
Exactly. Yeah. True.
Mayak has asked us, have you ever looked at Berkshire's holdings of Japanese stocks such as Mitsubishi, Marbella, etc.? At a recent meeting, Buffett highly praised these companies and talked about them as an investment for decades.
I haven't looked at them simply because I'm not interested in investing in Japan. But generally speaking, I would say the Japanese stock market and those companies listed there, they have presented very high yields, very good balance sheets. So I can imagine that Buffett is really looking into this space there.
Yeah, I think so. I think there's probably a good opportunity there. I'd love to look at Keyence. Keyence is one that I really like.
And what is it?
Keyence, they like make electrical components.
Okay.
So like sensors and they even have vision systems and stuff. But I really like Keyence. Nintendo, which would be one that I would like from a nostalgia point of view. But yeah, I haven't looked into it purely because there's enough companies in Europe and the US that I don't need to go that far afield. But the second part of the question, I think we probably answered with Japan, because if we haven't looked at Japan, we're probably not going to look at Mexican companies. But he's asked, have you ever looked at Mexican airport operators? He's gave two ticker symbols, PAC and OMAB.
Yeah, and he's saying this because Booking, I heard that as well, said that Canadians are choosing Mexico over the US for their vacations. So this would be for me like a typical investment to catch a short-term trend. Yeah, and that's kind of like buy the hype, sell the news. Is it like that, or buy the news, sell the hype, something like that? Yeah, it's just not my investment style, Maciej. So that's why I don't even look at those. They should pay a dividend, more than 10 years at least, have a very healthy balance sheet and low payout ratio. Then I may be interested, but then still it's Mexico. It's again a country where I don't trust the stability of the economy with all the drugs wars that are going on.
Yeah.
Actually, you could wonder, is a Mexican airport operator, isn't this a sin stock? Isn't this worse than Evolution AB or something like that? I mean, you're talking about drug trafficking.
I'm quickly checking to see how many Mexican listeners we have, just to see how many people you've just offended.
Yeah, but when you think about it.
But I agree with your sentiment. I think it is a short-term trend. I've also seen that Europeans have cut down their numbers in traveling to America. I don't know if this is true or if this is just fake news or anything, but certainly you're seeing a lot of these types of news that US is going to be hampered by what Trump is doing for people's vacations. But yeah, I'm not buying these type of hype stocks as you call them.
It is probably then now cheaper to go to America because it means like there's then some capacity left, and that means usually discounts.
Yeah. But Thomas has asked us, being now the world's 26th world's most influential podcast, do you think that you have already some impact on stock prices for some smaller companies? I know you are consistent in not giving advice, but I had thought about this when I was waiting to buy LEGN. I was not happy when it went up a day after I posted a video about it on YouTube. Probably a coincidence, but have you ever thought about it?
Yes, I have. Remember Defama?
Yes, I remember Defama.
Yeah, we had the CEO on here. I put a tweet one time out on Defama, and the stock price shot up by 7 or 8%. And then he sent me a direct message saying like, EDJ, watch out, because this is a micro cap. So if a few people buy it, it straight away influences the price. So that was a good learning. And since then, I'm not really talking about Defama anymore as such on social media, because micro caps are very sensitive to that. Legal in general is not a micro cap. I give you a lot of credit, Derek.
Yeah, but I'm not taking credit.
But your video and you're doing a really great job on YouTube, I must say. I really liked your last video again. So if people haven't seen it yet, Derek is YouTubing nowadays. Every Tuesday or Wednesday, he publishes a video. Last one was about your April dividends, and you get a nice overview of your 110,000 euro portfolio. But as long as you have around 1,000 views on the video, then I don't think you influence the share price on legal in general. Sorry for that.
No, I don't think so either. I don't think so either. But I mean, you make a good point about microcaps and the influence that potentially people could have on that, which is why we are always clear.
Mm-hmm.
We do not give advice because, one, you should not listen to us for advice, and two,
but you and I also know that people buy stocks that we are talking about, because I see, for instance, this week I had someone thanking me again for Ahold, and the person said, like, yeah, I bought it 1.5 years ago when I heard you speaking about it. So while it's not advice, we inspire people, but I would say there is a really thin line sometimes.
Yeah.
And that's why I always try to be on the conservative side. And if I hear someone asking already, what would you recommend? That's straight away like a red flag for me. Okay, now I'm really going to take a step back.
Yeah. But I feel the difference there is that we're talking about a company that we have skin in the game on ourselves, and we're talking about why we like them, why we bought them.
But you don't own Legrand. You don't have skin in the game on Legrand.
No, I don't.
No.
But I didn't say buy them. I did say
we never really say indeed we buy them, right?
Yeah.
But all I'm trying to say is, like, people follow, because I did the same in the beginning when I started investing. Well, I was looking at what Jason Fieber was buying, then started reading it, and I wasn't so literate yet in dividend investing, but I did have the cash, so I bought it. Yeah, and I burned myself a few times on that. Yeah, so and I'm sure that some people burned even on stocks that we have been buying, because I burn myself still sometimes on a few. So there is something here that we do influence with that. Yeah, whether we like that or not. That's all I'm trying to say.
Yeah. Anyway, to cut a long story short, legal in general did not go up because of my YouTube video. Rob has asked, if we consider dividend investing as a stock, what would our moat be against other types of investing? And also, what other features could work as comparisons?
The moat would be the cash flow growth over time and the stability.
Yeah, stability is for me is our moat. It's not the fastest growing. It's not going to give you the biggest returns over the shortest time, but I think it's the stability and the growth is our moat. And then what other features could work as comparisons? Probably talking, I don't know, share price. Because I feel we talk about growth, we talk about underlying numbers, not the share price.
Yeah.
But I always feel that the share price will follow the underlying numbers eventually.
Yeah. But on internet, it's usually that share price drives the narrative.
Yeah, exactly. But I think what features could work as comparisons, I think that some of our, let's talk about Ahold, for example. We just spoke about our average share prices and where they're trading at. So even from a capital appreciation, we can see that there's some growth there, but that's not what we focus on.
No, exactly.
Mick has saying that, seeing as I am from the Emerald Isle, is there any chance of a group meetup here? And I would definitely be up for that. If there's enough of us Irish listeners that want to meet up, I would be happy to organize that, and we can certainly do something. Gordon, are there any earnings you find particularly unpleasant to read because of the design of the presentation? And do you keep notes of earnings so that you know what to keep an eye on in future earnings?
Nothing comes to mind so quickly, but I hate those trading updates from those European companies, the Q1 and the Q3. They're kind of meaningless.
Yeah.
They just say like, sales grew, and then a few. I feel like just don't release anything. Just don't tell anything. I don't need a trading update. I find it annoying because it's like kind of making you horny, but you don't get to do it. Yeah.
It's like going to a strip club. That's what you're saying.
Yeah, but with a strip club, you could still argue like if you just bring enough money.
Yeah, one that springs to mind for me is Orange, the telecoms
Yeah,
company. I mean, I don't know if you've ever looked at their
yeah,
presentations.
they're horrible.
Black and orange, it's hard to read. Sometimes it's even hard to see the figures.
Yeah,
It just annoys me looking at it.
yeah,
If I'm
true.
honest. So yeah, I find them unpleasant to
And
read.
I also hate it when they make like digital earnings reports that are flashy and that you need to click and you have a page turning or something like that. Yeah, sometimes you come across those as well.
Because all I want to do is hit Control F sometimes and find something quickly.
I just want the PDF, poof,
Yeah.
and straight away Control F to go to some things that I know that I pay attention to.
Yeah. The second part of the question is you keep notes of earnings, and yes, and I think that is probably important to do as well.
I do.
Yeah. Peter has asked us, which of the companies you own has the largest moat, and does it have a high weighting within your portfolio?
Taking the whole conversation we had about moat, that moat can disappear as well. I do believe Microsoft and ASML. So ASML is a really small position in my portfolio. Microsoft is at the moment the largest position in my portfolio, but for me, those two have the biggest moats because Microsoft is so integrated in the company. You can't easily switch. I think it's harder still to switch from SAP in a company, in a corporate, but a close second is Microsoft. And then ASML we know, as a moat, it's just this the only company in the world that can produce those EUV machines.
Yeah. I'm looking at my top companies, and I would not say they have particularly strong moats. Like you have Ahold Delhaize, you have a lot of Dutch companies up there, ASR. Even if I go down the list to some of the mid-table ones, BAE Systems, Insurance, I don't think they particularly have high moats, and it's not something I require as an investment either. So I don't think anything. I think one of the strongest moats would be railways if you had like one of the railway companies, because you're not building new railways, so they would be someone with strong moats. But I don't own railways, so can't argue that.
True.
What are your thoughts on Realty Income's earnings?
Nothing particular. I didn't look deep into them, to be honest.
Okay. I didn't look at them. I'd probably look at them this weekend and see, but I didn't hear anything about them, so I don't know. And the second part is, do you ever consider investing in Main, ticker symbol MAIN?
No, I like he even mentioned, I stay away from BDCs in general. So
yeah. I have a small position in that when I was looking at them income factory style companies, as a kind of precursor to look into them a little bit more so I can understand them, but that always just keeps getting pushed out, and because it's a small position, it doesn't really hurt me. But I have it there because I think that is one of the biggest, if not the biggest BDC that everyone keeps talking about. So it's probably a good one to start with. But yeah, a small position, very, very small, and really as a prod to me to look into them at some point. But I don't know. What tends to happen is if I don't look at them over a certain period of time, I'll just sell them because I'm never going to look at them. So I'd expect that to happen at some point. RMS, I looked at your credit rating list and ADP seemed interesting after looking at it more. What are your thoughts? Have you ever looked at them?
Yeah, I've ever looked at them and I really like the business and I would like to own them maybe one time.
Yeah.
So we're talking about automatic data processing, which is all the payrolls and the salary slips. I own Paychecks, which is more for, let's say, small business and medium-sized companies, and ADP for the rest of the world, let's say. And yeah, I think those companies like SAP, again, they are so integrated into a company, you can't easily switch. Price hiking is a little bit easier there. You just need to do it that much that you don't piss off your customers too much. So, yeah.
Yeah, I remember we talked about timing the market. So I remember owning this company back in maybe it was 2018 or 19. It was one of my early companies, and it got to around $110, and I thought, "Oh, this is overvalued," and sold it. It's now sitting at around 310. So I didn't do a good job of timing the market on that. So I always remember that. But yeah, I think at the time I looked into it. It was a really, really nice company.
Mhm.
I was price anchored after that. I kind of learned my lesson. I was burnt a little bit. I was a little bit bitter that I sold it and it took off. But yeah, I think it's one that I would consider owning again.
Nice.
For sure. Okay, that's the last question. So thanks a million to everyone for listening. As usual, if you can, if you're listening to us on Spotify or podcasts, please like, rate us, and we will see you all next week. Remember, both of us at Dividend Talk are not certified financial specialists through formal education. We are just two guys sharing our journey for inspiration and entertainment purposes. Hence, this is not investment advice. Although we do our best, we can't promise that the information discussed is always correct, nor appropriate for you or anybody else. We always recommend that you do your own due diligence and be accountable for your own choices. As we always say, you can't borrow conviction from others. Last but not least, by listening to our podcast, you agree to hold us harmless from any ramifications, financial or otherwise, that occur to you as a result of acting on information provided in this podcast.